If you are trying to sell a property and you sold in 2024 when things weren't looking great, you were dealing with 2 months of inventory. What basically means that 1 divided by 2. Every single month, there was a 50% chance that your property would sell. So it's a very good market. This is why I'm saying it was still a very, very decent market at the start of 2024 relative to what we are right now. But if you look at where we are right now, which is 5.26, I was showing you earlier, 1 divided by 5.26 times 100 puts you at 19% of it actually selling. So if you do 50 divided by 19%, the market is moving 2.5 times slower. And this is why you're seeing a lot of price reductions and a lot of people selling for less than what it actually is worth. Because there's so much inventory that sellers who actually realize the math I'm showing in front of you, they're saying, oh, there is room for my condo or my home to go down in price. I might as well get rid of it now. Things aren't going to look any better. I don't think rate cuts, even after 8 of them, are going to move the needle. This is the problem with our current market and why it's such a soft whimper. The Toronto real estate market isn't starting to fall with a bang. It's more like a very soft whimper. Prices are down $55,000. Inventory is at a record high, and homes that are actually selling have been on the market for 50 days on average. Even with the Bank of Canada cutting interest rates, buyers aren't biting. Unless we see a major change or a few more rate cuts, this market will continue spiral downwards. So let's take a look at what's really going on with the latest set of real estate data. Hi, my name is Zen. If you enjoy my data-driven and number-crunching real estate updates, be sure to like and subscribe. Toronto real estate prices plunged further, which is correct, and inventory sits new high levels, which is also absolutely correct. Where the article is getting the highest amount of inventory right now is looking at this chart right here. And this chart is looking at historically what September looks like for active listings, or at the end of the month, how many properties have not actually sold. And you can see right now in 2025, it leads the pack going as far back as the 90s for how long we've tracked the data for. So right now we're sitting at almost 30,000 unsold properties at the end of the month, which we have never seen in September before. Now, I will say 30,000 was the benchmark I was looking at, and we have had months that were higher than that. But for September to be this high at the end of it means that there's not much momentum in the market right now. So these are what the stats are saying right now, where your average price in all of GTA is about $1,050,000. Yes, that is up 3% from last month, but this is very normal for August to September to actually have increase. Now, this is a slightly larger than normal increase, but it's not great because when you compare it to 2024 of last year, it's down 4.52%, and that's where your down $55,000 comes from. Now sales are at 5,500, and yes, they're up from last month, but they're up from last year 10%. But we are still at historic lows, which I'll show you a little bit later. And your biggest problem right now is that your active listings, which is right here, it's at 29,000, and it's up from last year, meaning stuff ain't selling. It's sitting on the market. Now your months of inventory is at 5.26, which is very high. And what this means to you if you're selling or buying is this. 1 divided by 5.26, it means that in the entire GTA market, in 1 month, the probability of that particular property selling is 19%. That's it. It's not a very good number. Before you even think about selling, don't let another chatbot price your biggest asset. Your property is not just another number. Hit the link in the description below, and I'll send you a personalized assessment with real data and expert insights so you can sell with confidence on your terms. Now, the months of inventory is also up almost 20% from last year, which means that the speed of which sales are coming relative to the amount of properties that are actually selling is much lower. But the only silver lining and the saving grace in all this is that months of inventory came down 0.38% from last month, which means technically, even the smallest tiny bit, the market is tightening by that metric. But that's just grasping at straws, okay? Now, when we break down the entire market as a whole, you can see the only real green shoot is over here, which is the Toronto detaches. You can see from last year, they're up $258 or basically negligible. And you can see in the 416, months of inventory still continues to be below 4, which puts it in a seller's market despite how soft it is right now. But prices are coming down. And I foresee this continuing for the rest of the fall market. Now, when you go into the 905 or the suburbs, you can see basically everything over here. Things are coming down. You're finally seeing the detached market go into almost a buyer's market. Yellow is a balanced market right now. So things aren't looking great in the 905 right now. And I suspect this will continue to happen as there's more and more people talking about returning to office. And the one thing I will note is that the condos have stopped coming down as fast, but they've come down the most in the last year. So on a relative basis, yes, they're not performing as poorly because they already had the initial shock, and now the freehold are now having that shock. Now, this chart here talks about the prices and how things have gone. And you can see basically right here, and I've been saying for a long time, you will get a bump up in price from September to August. You see that almost all the time in this entire chunk. It goes up. And I would say right now, this actually went up quite a bit, meaning this line is a little bit more steep than the normal lines. And the only time we saw it this steep was in 2021. Don't take this as like the market's rebound. I'm just saying this is normal to see this level of increase in average price. But you can also see that sometimes they level off, levels off. So usually your highest price for the fall market is sometime in October, November. And it's not to say that, hey, prices are going to be higher. It's more so generally the larger homes at that point do sell because they take some time to be on the market. And if you look at our active listings, which is unsold inventory right now, you can see we didn't quite hit 30,000, which I thought we would, which is a good silver lining. It just means that there are less new listings or we had enough sales to not break that 30,000. Because I was really concerned that we would actually break the number over here, which is past 32,000. But to be down here is a nice thing. But to say that it's nice is all relative. It's nice relative to what we saw during the spring market of 2025 of all the tariffs, but it's still the highest inventory that we've ever seen. You can basically see over here that 2025 is probably going to be the year of very, very high listings. And using this chart, I can tell you how the sentiment is for basically every seller that we talk about. You can see at the start of the year, everyone's like, okay, it's time for me to sell. And usually we have listings kind of build up in February and March. And you see that last year as well. But the problem is when you have a really, really weak spring year, inventory stays high and it keeps adding and adding on top. So until sales actually increase, I do not expect this chunk of listings that's anywhere between 25,000 to 32,000 to actually clear up. For us to be constantly at this 5,000 sales every single month, we're not going to clear this level of inventory. This is why I've been saying we need a pretty big sentiment shift to where sales actually increase much faster than the amount of unsold inventory is piling on. And that's the problem we have in this market right now. Inventory keeps piling up. The rates aren't making big enough of a difference when you have this many choices. Buyers are frozen, like I said in the last video. And also doesn't help that when a property actually sells, it takes 51 days to actually sell. 51 days on market. We were used to seeing 7 days on market before, like in a week. Now it's 51. And the difference right now, what you're seeing from LDOM, which is listing dates on market, is the actual listing. So if you see a property that sells in, say, 33 days, it's that one particular listing. But if they ever terminate it and then relist it, the total sum of days is actually 51. So you can see we're up 20% from last year, which means things are taking almost 2 months to sell right now. And this is assuming you actually do sell too, right? Because a lot of people are just terminating the listing, as you can see in this chart over here, where, you know, come November or December, like, well, we didn't get our price. Maybe we'll try again next year. And this is why listings always terminate over here. And we see very, very steep increases at the start of the year. You have to price well. The market isn't changing. Just because the active listings come down doesn't mean those people who are trying to sell won't relist it in the next spring or fall market. And you can see in the new listings in September, the curve was exactly as steep as what it was in last year, which means that, yes, sales were up a tiny little smidgen, but we had that much more new listings as last year, which basically meant the market continued to be in a soft state, a whimper, like I was saying earlier. And the reason why this is important is because the month of inventory continues to stay at 5 and above. So I was saying earlier that, hey, you know what? Maybe it came down a little bit from August for like this, and it came down 0.3%. But the fact that we are still above 5 is very, very bad. You can see that the month of inventory went from 2 all the way to 5 last year. And that was the biggest change. Everybody decided in this little gap they wanted to sell. So as a seller, why this is important is if you are trying to sell a property and you sold in 2024 when things weren't looking great, you were dealing with 2 months of inventory. What basically means that 1 divided by 2. Every single month, there was a 50% chance that your property would sell. So it's a very good market. This is why I'm saying it was still a very, very decent market at the start of 2024 relative to what we are right now. But if you look at where we are right now, which is 5.26, I was showing you earlier, 1 divided by 5.26 times 100 puts you at 19% of it actually selling. So if you do 50 divided by 19%, the market is moving 2.5 times slower. And this is why you're seeing a lot of price reductions and a lot of people selling for less than what it actually is worth. Because there's so much inventory that sellers who actually realize the math I'm showing in front of you, they're saying, oh, there is room for my condo or my home to go down in price. I might as well get rid of it now. Things aren't going to look any better. I don't think rate cuts, even after 8 of them, are going to move the needle. This is the problem with our current market and why it's such a soft whimper. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, but decades of experience to work for you. There's just too many choices for buyers and they're just taking their time deciding which one they want. Like I was saying in other videos, buyers now want like a 12 out of 10 instead of like a 7 out of 10 in 2021. The expectations are just different now because there's so many choices. And the thing that everyone will be celebrating is this little amount over here. So when you graph it out, you can see just how minuscule it looks. Everyone is celebrating this little gap over here. And let me just point an arrow to it in case you can't see it. That little gap, the sales increasing 7 or 8%. It's anemic. Look at this. This is where 2021 was. I'm just hoping to get us back to the norm of like maybe 7,000 sales a month, which is around this line over here. Look, there's still a really long gap for us to get back to the slightly below 10-year average. This is how pathetic the number of sales is in this current market. It's anemic. And again, this is why I was saying the market just started off the fall with a soft whimper. And this is all before a potential recession too. And looking at the historic data, this is the chart that I was showing you earlier. We have unprecedented amount of unsold inventory for the month of September, and we've never had it this high. You can see we're normally at about 15,000. We've doubled that basically. And when you look at the historic sales over here, you can see, yes, this is our 5,600 right here, and it has gone up 2 years in a row. But it's anemic right now relative to the rest of the bars, because even if you use the average, like I was saying, for 7,000, which goes all the way back to the 90s, it's the orange line, that's 7,100. To get the last 10 years, it's 7,700. It's still very low right now. That's the problem with the current market. And we look at new listings. Yes, this is the average amount of new listings we're getting right now. It's above the 10-year average, and it's not that much more above it. But the fact that no sales are happening forces these new listings to actually not get sold, and the inventory kind of builds up. And that's the problem with the market. It's an inventory problem, like I've been saying for the last few months. And this is exactly why, even though last year was bad and we have more sales than last year, when you look at the most important metric, which is months of inventory, you can see we have increased from last year. We went from 5 point something percent to a slightly higher 5 point something percent, which means that yes, sales have increased, but the amount of unsold inventory is piling on. The definition of a seller's market, then the weakest seller's market is actually 4 months of inventory, which is very, very soft. So we need to see the months of inventory for the entire GTA below this red line I've highlighted here, which is 4 months of inventory, before we start seeing prices increase. Right now, we are going the opposite direction. This is why I keep saying the inventory is the biggest leading indicator of where prices are going to be. And we have a huge amount of inventory that we have to basically sell right now before we start seeing prices go up. And this is exactly why you're seeing a lot of distressed sellers out there. And I talk about this in the previous video where I said, if you're trying to buy a property right now, yes, you're kind of going against the grain and things aren't looking great, but you can find a nice property that you're looking for if you can find that right person who's willing to let it go for a very good price, and you bake in your buffer so that if the market continues going down, you still get a good deal. And this is exactly what I talk about in this video over here. So make sure to check that out. Until next time, your move, your future. See ya.